Hello and welcome back to GoldStockTrades.com. Today we have a new and special guest with us, Corey Diaz. Corey is CEO of Anfield Resources, which can be traded as ARY on the TSX Venture and as ANLDF on the OTC. Thanks, Corey, for being here with us today.
Thanks, Jeb. I appreciate you having us on.
Corey, Anfield just acquired a major uranium mill and uranium assets from Uranium One. Tell us about the uniqueness of having a junior uranium company that has a mill in the United States.
Well, Jeb, we've acquired one of only 3 conventional uranium mills that is currently licensed, permitted, and constructed. So I think from that perspective, it puts us in a very unique position. Secondly, we'll be one of only 6 producing junior uranium companies in the U.S. Once we do get into production. So that moves us from being a junior developer into a nurture developer space, which is a very small group. Secondly, the fact that we're actually acquiring assets with historical resource in place, 6.8 million pounds of measured and indicated, 2.1 million pounds of inferred, I think that allows us to move towards production even more quickly. There's certainly enough resource there for us to commence production as soon as we're able to get the mill up and running.
Corey, we're aware, many uranium investors are aware of the expiration of the Russian HU megatons to megawatts. The U.S. currently produces in only a fraction of what it demands every year. It's the largest nuclear consumer. Tell us about the significance of having only one of 3 licensed uranium mills in the U.S. at this time.
Well, I think it's very significant. The likelihood of having new uranium mills built in the U.S. is quite low. I think a number of environmental groups have issues with the idea or prospect of having nuclear power, within the vicinity of communities, etc. So from that perspective, the process would take a very, very long time to get from concept to construction. So from that perspective, we've been able to bypass probably somewhere between 7 and 10 years of planning to get this asset available for production. So I think, given the fact that the U.S. is a major consumer, has 100 plus nuclear facilities, I think that being able to secure some domestic supply would certainly be of interest to a number of these nuclear producers, especially given the fact that there are so few domestic producers available from which to buy ore.
Corey, talk to us about the condition of the mill that was acquired from Uranium One. What sort of work will be needed to get this up and running? Could you give us any sort of idea of what sort of condition it's in?
Sure. It's a mill that was constructed back in 1980. It ran for about 4 months and produced a small amount of ore. But given the downturn in the uranium price back then, the mill was basically shut down and has been on care and maintenance ever since. One important thing to remember is the fact that the nuclear industry and the uranium industry both are quite tightly regulated. In Utah, regulation falls under the Utah Department of Radiation Control. So a mill like this won't be left to just sit in disrepair. It's very closely monitored by this group. So from that perspective, the mill is in great shape. Obviously, technology has improved over the past 30 years, so there will have to be some upgrades done to the property itself. So we're talking about a process which could take, probably about 2 years for the mill to be in shape to move into production. But that's just a function of upgrading facilities and equipment and making sure that the UDRC is comfortable with the changes that we make in order for us to move forward. But it's usually a fairly straightforward process.
Corey, tell us about the history of the mill and the prior owner, Uranium One, and why they were looking to divest from this asset.
Well, Uranium One used to be a publicly traded company. It was recently acquired by a Russian state-owned agency with uranium assets and interests in not only Russia but satellite states, including Kazakhstan. So the focus has shifted for the company from North America to Central Asia and Russia. So from that perspective, the mill was no longer of interest to the company. Secondly, the Russian company also has a focus on ISR production, which is something significant being done in Kazakhstan. So from that perspective, the conventional assets were of less interest to Rosatom, which is a Russian company. So, the idea was to spin off those assets which weren't aligned with its usual strategy when it comes to mining uranium.
Talk to us about the location of this mill versus some of the other ones that where you have other properties around.
Well, this asset's located in Utah. A lot of our mining assets are also located in Utah. The assets that we've been acquiring over the past few months, we have assets in Colorado, which are close to the Colorado-Utah border. So in terms of shipping, we're talking probably less than 150 miles from any of our properties to get to the mill. So they're all still well located in terms of production potential. We have assets in Arizona, which are also within shipping distance. So I think from that perspective, we've been able to secure not only a mill within radius of the other acquired uranium resource, but also near enough to our existing properties that we can certainly ship ore from those properties to the mill.
So this transaction really establishes Anfield as one of the largest juniors of uranium properties in the U.S.
It does. It establishes us as one of the potential leading producers in the U.S. I mean, it's a question of the fact that we can actually produce within the U.S. to sell to U.S. market if possible. The fact that there are very few other parties doing the same. The other conventional mill in Utah is owned by Energy Fuels, and Energy Fuels produces about 1 million to 1.5 million pounds a year. So, our plan is probably to look to produce something along the same lines. So, from that perspective, I think it's a great opportunity for a company like ours, especially given how well companies like Energy Fuels have done in the market recently, and we think that we can certainly reach similar heights.
So as we can conclude, Corey, many of us are aware of this uranium deficit in the United States, where they use close to 60 million pounds of uranium, but only produce, I think, less than 5 million pounds of uranium every year. When uranium investors looking at this market, why should they take a look at Anfield Resources?
Well, I guess there are a few things. As I said, we are now joining a very small group, a very select group of uranium producers on the junior side. We will be one of only two conventional uranium producers in the U.S. The third mill is owned by Rio Tinto, and Rio Tinto isn't focusing on the uranium space at the moment. So I think the fact that we are in a unique group is one thing. I think secondly, from a valuation perspective, our market cap is below $8 million at the moment. Comparable companies such as Energy Fuels, UEC, are trading anywhere from 120 to 150 million dollars in terms of market cap. So significant upside in terms of an investment opportunity here. Thirdly, the fact that the U.S. does have a significant deficit when it comes to the uranium, supply-demand imbalance. I think that presents us an opportunity to start selling locally into the market. Obviously, we can't fill the entire deficit, but we can certainly help to mitigate a little bit of it. Finally, I think the fact that the U.S. and Russia are having a number of issues right now, the U.S. issuing sanctions against Russia, that could also impact incoming flows of uranium, given the influence that Russia would have over Kazakhstan or any other producers in kind of Central Asia. So that may help to accelerate any kind of shift that the U.S. would have towards domestic consumption of uranium. So it could prove to be an opportunity for us moving forward. So I think that from those points, I think that makes us a compelling story, and I think that certainly there should be some attention paid to us, given that we are going to be a unique asset moving forward, and certainly sitting in a unique group of uranium producers in the near term.
Anfield CEO Corey Diaz. Anfield can be traded as ARY TSX on the TSX Venture and as ANLDF on the OTC. Thanks, Corey, for being here with us today.
Great. Thanks, Trevor. Appreciate you taking the time to chat with me.